Welcome to the Just Word Podcast. I'm Pat Bolland. The Just Word Podcast is brought to you by Justwealth, investing the way it should be, just for you. Francis HORODELSKI has been watching the markets for, 4 decades or so, coming out of the investment banking industry. And then you might know her from her days on BNN, Business News Network in Canada. And she's going to join us to talk about 2021. Francis, so great to see you again.
Nice to see you again too, Pat. Always a pleasure.
Francis, I got to tell you, I read your blog on a daily basis. I love your market commentary. How do you keep up?
I guess because it's been a passion forever, and I have no other hobbies. I don't golf. I walk. I read. I do all those other boring things, but it's a passion. So, and people feed me things, and I read everything. I read voraciously, and I try. Try. Some days it's harder than others, of course, because the markets are moving so quickly these days. Yeah, maybe they always move quickly.
I was going to say they've always been like that, but this year in particular, it's been a very odd year. So we're going to do a recap of what's happened in this past year. And I think the biggest thing that I noticed, and maybe you can differ on this if you want, is that in 2020, 2019 for that matter, the tech space was the be all and the end all for the stock markets, especially in the United States. Less so in 2021. And yet there was a clear rotation into other areas. What do you see as the key driver, both in the decline in the tech and then the rise of other sectors?
I think it's my old phrase, everybody shifted. It's either the pendulum shifting or a different metaphor, everybody going to one side of the boat, then to the other side of the boat, just before it tips over. And rotation this year was, in and out of tech. I mean, it started the year with, the meme stocks and the SPACs and all that, which had some tech flavor to it. You had the big ARK funds who were well followed earlier in the year, and that was all the future and tech. We had crypto, which came up and down and back up, and maybe is going down again. We'll talk about crypto in a little bit. So it was really, it was the swings as so much money was being made available into the system. You had everybody being paid to stay home to some extent. You had the liquidity of the Fed and all of that money just sloshing around and causing, as I said, the pendulum to swing. And there was that growth versus value fight as well that we saw a number of times over the course of the year. And we may even be doing that right now as we move into 2022. Kind of the tech trade is cratering a little bit. I don't want to put too much emphasis on that. And the value trade starting to pick up. So it's really just, to some extent fast money, to some extent the pendulum swinging, and to another extent, the difficulty predicting right now what's going to happen next. So with, various COVID variants running through our lives. So it's changed both the way people look at the market to some extent, but also at any point in time, what makes sense as an investment, because are you staying home, are you going to work, do you have new technologies, old technologies, do you need your toilet paper, do you not need your toilet paper?
I want to come back to the pandemic, but before we do, I want to talk about earnings, because as you and I have been in the market long enough to know that earnings drive the market. Do you think there's a point at which earnings have been unsustainable, or that the market has overvalued earnings?
Well, certainly in 2021, earnings were huge. I mean, because you were comparing off of what was, even if it was a small recession in 2020, earnings collapsed, energy collapsed, all kinds of things collapsed in terms of profitability. 2021 saw the flip side of that. We saw the easy comps. I think for the S&P 500 earnings end of the year, probably up about 45%. I mean, that's because you had this denominator that was so low. So you had that as the tailwind for equity markets in 2021. 2022, it just can't get that much more profitable. The comparisons in 2022 are going to be, pick a number, maybe 10% year-over-year growth on average for the year, maybe a little higher in Canada for a variety of reasons. And the first half of 2022, it could be single digits. So, it's not a headwind, but it's not the tailwind it was in 2021 for sure.
Okay, let's go back to that COVID concept, because pandemic was certainly talked about, but was it acted upon?
Well, if you were early enough, and it sort of started in 2020 with the lockdown trade, the Zooms, the Pelotons. So people did act upon those beneficiaries of the lockdown or the stay at home, Amazon, e-commerce, all those kinds of things. So I would say, yes, people did act upon it. It's hard to, and you see it in the profitability numbers earlier for some companies, like a DocuSign, for example. I don't know if I want to call it earnings. I mean, revenue. For a lot of these companies, you saw this big, revenue boost. Profitability is, for a lot of those companies, is non-existent. I saw an article from UBS that said, for a Peloton, for example, that profitability is unattainable. I don't even know what that means for a company. I don't know what, ultimately you want to be profitable. So do people act upon it? Yeah, I think for sure, whether it was sectors that they wanted to be in, whether it was an emotional response to not being in the market at all because of heightened volatility and heightened worries and heightened concerns, staying away from some sectors that would be hurt by the variants and COVID itself, including companies that do surgeries on knees and hips, for example. And those companies haven't performed because nobody's going to the hospital, or fewer people are going to the hospital to have those kinds of things done. So I'd say people acted upon. They're still acting upon it because depending on what somebody says any particular day, whether it's Moderna about a booster's efficacy or GlaxoSmithKline with a pill, an antibody pill, those kinds of things get acted upon pretty quickly.
Okay. Towards the end of 2021, we started to get changes in the outlook for interest rates. Does that, is it warranted, number one, and inflation is probably part of the equation, but also does it affect the outlook for the stock markets in 2022?
Well, there's a lot of academic research done on that, certainly in terms of how, well, there's a couple of things to keep in mind. We're at historically low level of interest rates. So even if the Fed, and the consensus said the Fed will increase rates 3 times, maybe 4 in 2022, the Bank of Canada is on the edge of raising rates. The Bank of England did raise rates near the end of December. But we're off like ridiculously low levels. We're not in a recession. We don't need those kinds of liquidity measures. So the big central banks are getting rid of quantitative easing, buying back bonds, and they're going to move towards rate increases. Everybody gets antsy about it, but the history suggests that it used to be, you might remember this from the old days, it was, 3, I think it was 3 jumps and a tumble. So you needed at least 3 rate hikes before equity markets responded. Equity markets have a history of going up into the first rate hike and even beyond. So it will have an effect at the margin when you look at things like PE multiples. Hard to get expanding PE multiples in an environment where rates are going up, but they're still so low. I mean, I think that's the thing we really have to, and maybe they're not going to stay low forever, but you're not going back to 5% on the Fed funds rate. my view. You may go to 2 over the course of the next couple of years. Geez, remember, you would have given your left arm for that kind of rate environment in the past. So
absolutely true. But isn't inflation a going concern?
Well, yes and no. Everybody always, that phrase from some very smart economists that everywhere and anywhere, inflation is a monetary issue. I don't know if it is really, and I'm not smart enough to argue with some of the greatest thinkers over the world in terms of economics, but there was a confluence of things here that have caused inflation to rise. You've had energy coming back from the abyss. You have all of these supply chain issues that have jammed up the works. You are getting wage inflation, and that's going to be a factor in 2022. But some of these other issues will not be as, it's the rate of change issue. You're not going to get another 0 to 70 in the price of oil. People who watch these things suggest that supply chain issues are being solved as we speak. Yeah. And there's going to be, a wealth of things, cars, stuff that has been affected, semiconductors that has been affected by the supply chain issues. That's going to ease a lot. So, we're not going to probably go sub 2% inflation in 2022, but I don't think we're going to stay at 5 or 6 either. So it's an issue. All of these things are modest headwinds, but they're not a tornado coming at you in terms of where we might be over the course of next year.
Fair. You brought up energy. When you think about the Toronto Stock Exchange and the 3 dominant sectors, at least traditionally, and I can't say it's true anymore, the TSX seems to be a lot more balanced with companies in the tech space like Shopify, for instance. Yeah. But traditionally, it's been energy, it's been mining, and it's been banks for the TSX. How have those sectors in particular done?
Well, they've done well. Mining has been a little choppier because in mining, you've got gold. So while some of the copper players have done well, the zinc players have done well, gold has been a mess. And in fact, if you look at the top performers for 2021 on the TSX, the worst performers in the TSX composite, a good chunk of them are gold stocks and marijuana stocks. So, but there's subsectors of the mining space that have done okay. Banks have done very well. They were a place to hide. They're always a place that people hate for a variety of reasons, but they've done very well. And of course, we just saw after the fourth quarter reports, big dividend increases. We'll probably see more in 2022 for the banks. And energy came back from being, a dead sector. And even in 2022, the forecast is from bottom-up analyst expectations that energy could be one of the best sectors in this coming year, in 2022. I worry about energy a little bit, that they'll do some stupid things with all the capital. And they're generating huge amounts of cash. And the bulls say they'll, it's even at $70 on oil, they make a ton of dough. And they've been giving it back. They've been pretty disciplined on CapEx, but like the banks too, sometimes all that excess capital or excess cash flow ends up burning a hole in their pocket. And so they do something stupid. Having said all of that, I wouldn't be overweight oil. I think oil is going to be choppy in 2022, probably be market weight. Banks, I'd continue to hold my banks selectively because there's just not very many places that give you that kind of long-term stability and that long-term dividend growth. And I'm kind of partial to golds, although that might be a relic, the way people talk. Gold hasn't been able to get out of its own way here.
It's interesting what you say about gold, because I've never considered supply and demand the issue for gold, for instance. I've always thought of gold as a competing currency. Mm-hmm. But while we're on the topic of currencies, crypto. I'd love your thoughts on crypto because it's experienced some of the same volatility as gold this past year.
And I think you hit it on the nose in terms of gold, because now there are so many opportunities to, whether it's a store of value or it's a different currency from fiat currencies, crypto seems to be taking, to some extent, the place. There's still gold companies that are making a lot of money. Their all-in sustaining costs are low. They're generating a lot of cash flow. It's going to be a lot of consolidation in that business. Crypto, I've been there for a while. I'm wimpy. I like to say I'm a wimp the way I play it.
You've been playing crypto
through closed-end funds and through ETFs.
Wow.
I will say earlier in the year, my son and I, as part of the crypto atmosphere, if you will, my son and I were playing, quote unquote, NBA NFTs, non-fungible tokens, earlier in the year. We had a blast, not a lot of money, but we had a blast.
You're a gambler.
Trading NFTs. So as far as, oh yeah, it was so much, I must say it was so much fun. But it was like $100 here, $200 there kind of thing. It was just fun. And NFT, I mean, I missed all the big NFTs for sure. But on crypto itself, it is going to be, it's not going away. There will be some regulatory pushback. There will be digital currencies from central banks. Although my sense about digital currencies from central banks is they kind of defeat the purpose of a Bitcoin. They're not anonymous, and they're regulated. I mean, I think people really like the freedom that a Bitcoin or the platform of Ethereum gives. I mean, there's way too many coins, just way too many. There's thousands of coins, and there's joke coins. And so there will be a fallout. We may be going through it right now as some of the cryptos pull back, but they're going to be the basis for whether it's all these things I don't understand, like the metaverse and the multiverse and Web 3.0. Technology is moving very fast. Bitcoin might, in fact, not be the place to be because its technology is static, I think is the way people talk about it, where other things are moving so fast and developing so fast, be it Ethereum or some of the other new I call them platforms. So I think you have to have some in your portfolio. It's like saying in 1995 or 6 that you didn't want to be involved in the internet. I mean, it's the way of the world is my simple view.
Wow.
I'm a simple person.
Wow. The other thing, and I'm going to go from one end of the spectrum, if you will, the volatility, to the other end of the spectrum. The stock market is a market of stocks, as you and I both know, but ETFs, especially broad ETFs, have been extremely popular, especially in 2021. Why do you think that is?
Well, because there's a variety of reasons. One is there are just so many. So you talk about the broad ETFs, you can buy the TSX or the S&P 500 or the world index. So you don't have to make any really sophisticated decisions. You can say, I want to be in the stock market, and so I can go there simply, cheaply. The other thing is, and that's drawn in people who didn't have any knowledge really of stock markets and how to analyze individual companies. So it's simplified portfolio development a lot. But you can also drill down. I said I own some Bitcoin ETFs. I own an Ethereum ETF. You can buy a mining ETF. You can buy a consumer products ETF. So you can a marijuana ETF. So you can really boil it down and build a whole portfolio. But it's interesting, in 2021, there was this earlier in the year discussion about, passive investing was overdone. You really got to get into active investing, even through ETFs. But at the end of 2021, it's interesting that you really were better off being passive, buying an index ETF rather underneath so many stocks. The average stock in the Russell 3000 is down 28%, where the index, the index was up 25%. So there's something to be said for passive, but I think it's just simplicity is made and cheapness. People focus on the cheapness of ETFs. So, in terms of management fees.
We're running out of time, but I do have a question that's a little bit different because I'm reading on something called Muckrack, when I don't know what Muckrack is, that you're a former BNN TV host. I knew that. You love stocks, music, words, and time travel. Where does
Yeah.
time travel come from?
I don't know. I've always been intrigued by the side. I'm not a big science fiction reader, but I've always been intrigued by that ability to go back and forward. So, and there's all kinds of books written about it, and it just always intrigued me that I don't know. I know nothing, but are there parallel time universes, and that we can switch between them? That whole idea of you can't change time, but you could relive it. I don't know. It just intrigues me. Maybe I want to live forever. So immersing myself in time travel might be able to do that.
We'll just start calling you the Highlander.
Yeah.
Frances, as always, a pleasure to chat to you. Maybe we'll do this again.
It's been great, Pat. All the best in 2022.
Thanks so much. You too.
Okay.
See ya.
Take care. Thank you.